Trading bonds on Degiro, here is everything you need to know from the fees, the credit ratings, the coupon rates and the cash flows. One of the biggest advantages of trading with Degiro is that you have access to both corporate and government bonds, which is something that very few other retail trading platforms actually have. Although in recent years bonds have really fallen out of favour with retail investors because of the low interest rates, bonds still offer a very stable and lower risk option to add into your portfolio. The main reason that there are lower returns on bonds is because they are much less risky than stocks. This is because in the event of a company ever going bust, bondholders would be up towards the top of the list when it comes to deciding who's going to get paid out of the company's remaining funds, and shareholders would be actually towards the very last people to ever get paid back. Another reason for the lower returns is that bondholders are almost guaranteed that they are going to be paid their interest, because no matter if the company makes a profit or a loss, this interest is going to be paid, and it will always be paid before a company ever pays any dividends. I know from looking at my YouTube stats that most of you looking at my videos are pretty young and a long way away from retirement. So most likely you have most of your investments at this stage in growth stocks and crypto. But no matter what your strategy is, it is very unlikely that bonds won't play a part at some stage in your investing life. Most financial advisors will tell you by the time you get towards retirement, they recommend that you would need to have about 60% of your investments in stocks and about 40% in bonds. The reason for this being, if you have a good portion of your investments in bonds, this will smooth out all the effects of market crashes and any other bear markets that might affect your portfolio. Now let's go and have a look at where you can actually find and trade bonds on Degiro. So if you want to find bonds on Degiro, it is very easy to find. All you have to do is come down to the product section here on the left hand side, and that would give you all the different types of products, and it has bonds here also on the list. So just click on that and it will give you all of the different bonds that are available on the platform, and you can filter this then by either government or corporate bond, or else you can filter by the different types of markets. You need to take a small test to prove that you understand the more complex bonds before you're allowed to trade them. So to find where you actually go and do this test, you come down to settings here on the left hand side and product settings, and then you will see all the different types of financial instruments down here. So you can scroll down to the section here that has complex bonds, and then you simply just turn it on and take the test, and then after a few minutes you will have access to all of the different types of bonds. But before you actually invest in a bond, what do you need to consider? The very first thing I do when I go to look at a bond is I take the ISIN number, which you see on every bond on Degiro, and I stick that into Google. Any of the top results will help you find the following details about the bond: its par value, its coupon rate, its maturity date, and the institution that is actually issuing the bond. I'll just briefly explain what these are so we are all on the same page. The par value of the bond is the amount of money that the government or corporation promised to repay at the maturity of the bond. So this is them essentially repaying the full amount that they originally borrowed. But the price you pay as a retail investor on Degiro will be different to this par value. This is because when you buy bonds on Degiro, you are buying them on the secondary market. So when you buy a bond on Degiro, you will either be buying it at a discount. This is when the price of the bond is actually below the par value, or at a premium when the price of the bond is actually above the par value. The coupon rate is the percentage of interest that you will get paid every year for holding the bond until maturity. So let's say the coupon rate of a bond is 4% and its par value is €100. That means every year until the bond matures, you will get paid €4 in interest. The next step that I go through when I'm looking at a bond is working out all the different cash flows associated with the bond, so you can work out what your potential return is. Because a bond's income streams are mostly fixed, it's very easy to work it out. Let's have a look at an example of a bond here on Degiro just to see why it's so important to look at the cash flows. So the example I'm going to look at here first is the Heineken medium term note, which is the MTN. That's what that stands for here. So this is currently priced at €110.50 at the moment. So the first thing I want to do here is come down here to the right hand side and copy the ISIN, which is the identifier for the bond, and I will paste this into Google. So one of the top results for Google on this bond is this Lux Prime website. This is actually one I use regularly, and I'll leave a link for it below in the description section. So this gives a nice little summary of all the details of the bond. So we have a coupon rate of 3.5% on the bond, and it pays this yearly. It has a redemption price of €100, and it matures on the 18th of March 2024. So that redemption price of €100, that is the same as the par value as what I was talking about earlier on. So let's have a look at the different cash flows associated with this bond. I'm just going to put them all down here on a spreadsheet so you can see them clearly. So the initial investment that you would have to pay to buy one of the bonds contracts is €110.50, which is the price I was just showing you here a minute ago on Degiro. Then buying one of these contracts would entitle you to receive interest every year of 350, which is the 3.5% multiplied by the par value of 100. So you would receive this in 2022, 2023, and 2024. And then also in 2024, you would receive back the initial par value associated with the bond, which is €100. And the net cash flow of all of that actually adds to zero. So there's no actual return on this bond at all. You're actually coming to a net cash position of zero. So the amount that you put in at the start, you're going to get back, but at a later time in the future. So obviously, this is not ideal. It's better to have cash in your hand today than receive the same amount in the future. So this is not a bond you would want to be looking at the moment. This highlights why it's so important to actually go and have a look at the different cash flows. If I just bring you back to this Lux Prime website again, I just want to show you a handy way to replicate what I did there on the spreadsheet. So if you come down to the bottom section here, all you have to do is actually put in the quantity of the bond that you want to buy. So if I wanted to buy one of the contracts, I'm just going to put in a price of 100 here and hit calculate on the left hand side here, and this will populate all of the different cash flows. So as we can see here, the initial investment here is €111, which was the same as what I had in the spreadsheet. We have total cash flows in here of 11, which is the 3.5% over the 3 years. And then you receive back your €100 at the end, also your redemption value. And the net cash flow is -1 that they have here. So this calculation will quickly show you what the net result of you investing in the bond is and the net cash flows. So this bond has a yield to maturity that is actually negative at the moment. That's what this YTM stands for, is yield to maturity. So the yield to maturity is a percentage return on the bond if you hold it towards when it matures. So when you're investing in bonds, it's important that you look at ones that have a positive yield to maturity and not a negative one like this one. The last thing that I would check out is what is the credit rating of the bond. There are independent bodies whose sole job is to review the companies that issue these bonds. Examples of these independent bodies are Standard & Poor's and Moody's. These independent bodies will give these governments or corporations ratings on how likely they will be able to repay their bonds. The idea behind these ratings is to show you, the investor, which bonds are really risky and which bonds are safe. We have, however, seen these credit rating agencies being asleep at the wheel in the 2008 financial crash. That being said, let's have a look and see what the credit rating is for the bond I looked at earlier on, the Heineken medium term note. So I've just come onto the Moody's website here and I've taken the ISIN, which I used earlier on, and I've put it into the search bar. So it shows you here that it is senior unsecured debt, and it has a rating of Baa1. So the class of the bond is also something that you should pay attention to. This is kind of a ranking system for who gets paid first in the event that the company goes bust. So just back to the credit rating here, let's have a look at the Baa1 rating. So if you want to check out and see what this actually means, all you have to do is even just go to Wikipedia to have this table here, and you'll be able to compare what each different level of rating means. Okay, so next up, what are the actual fees of trading bonds on Degiro? So I have just the fee schedule here. It depends on what different exchange that you're using. So if your exchange is based in the Netherlands, Belgium, Portugal or France, it's a €2 fee per trade plus a 0.06% custody fee, and it's €5 plus 0.05% in Germany. And for over-the-counter bonds, it's a €35 fee and 0.03%. So I hope this video gave you a good overview and a better understanding of how bonds actually work on Degiro. And if you have any questions on anything I've covered in the video, please drop a comment below and I'll try and get back to you on it. But other than that, if you feel we've bonded talking about these bonds, make sure to subscribe to my channel and like the video to try and get this video out there a bit more to other people. Thanks very much for watching. I'll talk to you again soon.